you've been a student of mine for any length of time, you know that I teach several specific openings, and one of them is the midnight Eastern time. So, in other words, New York midnight local time, and that's denoted here, as you can see there. And at 7 a.m., that starts the pre-market session. It can early start technically around 6:30. I usually, if I'm awake, I'll spend the next 30 minutes between 6:30 and 7, kind of like getting a read on what it could do, what it likely may or may not do. But officially, it's 7 o'clock a.m. Eastern time up until 9 o'clock or so. And obviously, you know that we were looking at that relative equal low on the daily chart. I want to look at this here where we have a midnight open at Friday, and we have a unrealized objective or draw on liquidity. And the midnight open price generally can act as a kind of like a fulcrum point and like be a bookend or a beginning point of the daily range expansion. So in other words, if we were bearish, normal ICT power 3 concept would be open, go above the open at midnight, and then drop lower and go lower for the day, and then close somewhere off the low or whatever. But here we have this open at midnight, and then as we enter into Frankfurt and then London and whatnot, we had these relative equal highs here. So we did drop down to around 4:40 a.m., but we're getting close. We only got 20 minutes left of the London Open kill session, kill zone rather, and then pulls right back up into that inefficiency that's seen right here when we go into a 1 minute chart. But I use the 5 minute chart simply because it's allowing me to show the whole panoramic view, and then we'll break it down on a 1 minute chart. But just be aware that this high and this high is significantly lower than the opening price, while yet not having traded to our daily objective, which is those relative equal lows on NASDAQ's daily chart. So we retrace back up into here, and then when we hit this inefficiency, the fact that we are entering 7 a.m., this is when it accelerates and then runs down through and gets that daily relative equal lows. And then we have a massive short covering because the entire internet was watching ICT outline this is where it was going to go, and they all covered their short there. Okay. And we had this huge, massive short covering rally that takes us back above and cleans up these relative equal highs. Lots of liquidity in here. So notice what it does. It goes up and comes real short to the midnight opening price, but then falls short. Okay. So what am I teaching here? Whenever we go into London and we have relative equal lows like this, and then right before 7 a.m. we get this one more time, don't hold with the expectation that we're going to go all the way back up to the opening price. That's not necessary. It can, but it's many times not going to do that. But looking for your target, once it does that, then go just for the relative equal highs. And then in here, you can take some from profit. Now notice that the fair value gap that forms here, beautifully done, trades up, fails to get the bodies at consequent encouragement, sells off. We have order block here on the 5 minute chart, changing the state of deliveries right there. Once it passes through it right on that candle, it need not, like it does here, close below it. We don't need to see that, okay? You see these guys teaching my order block theory or attempting to, and they're saying it's got to get it closed. No, it does not, okay? It does not need to have that. Yeah, your narrative has to be correct. And then the market rallies one more time up into it there and here, and then finally gives up the ghost, and we're back inside this area. And we have a minor sell side liquidity pool here, which is just above our daily relative equal low draw. And we had a nice sell-off, aggressively runs into it. And then once we have that, we come all the way back up into these relative equal highs. So I'll let you guys stew on that, and I'll come back later on this evening after the market settles down and closes for the weekend, And until I talk to you then, be safe. Let's wrap this up here. 1 minute chart. This is what I was giving a lecture on this morning, okay? I gave you 8 minutes of very specific, succinct information in regards to when you have relative equal highs, which we have right here. See that? Relative equal highs, and we're running up into the beginning of 7 a.m. If you're looking to trade 7 o'clock in the morning to 9 o'clock in the morning, which is pre-market session, and you see these types of settings here, just because it has these smooth highs up here and we're approaching 7 o'clock, it doesn't mean that it's going to go right up here and punt. It could, but what's more likely? To get down to the higher time frame draw on liquidity, which is those relative equal lows at 28,512 on the daily chart, given to you in advance. Yes, it'll cover from 7 o'clock. Look how fast it starts running. Here it is, 7 o'clock, boom, starts ripping. And then at 9:30 opening bell, we get a little bit of a Jesus swing here, and it can't even take that buy side. Why? Because it wants to go where it's aiming for all week long. Daily relative equal lows. That's the winner on the downside. Remember, I capped the weekly range in commentary on Monday. That's the draw on the week. Wait a minute now. You're trying to tell, yes, it's exactly what I'm telling you. I knew we were going to take out these relative equal lows in advance. So the point of this lecture this morning at 8 minutes long was if you're trading in between these two time frames, okay, 7 o'clock in the morning and 9 a.m. Eastern time, if we're real close to running out what looks like relative equal highs, but we have not finished the week's business down here going to that draw on liquidity, don't think that it needs to go up there first. It only has today, Friday. It only has Friday to get down there. And what rocket fuel is it going to use? The session start of pre-market session, 7 o'clock. Run down, gain a lot of the ground that needs to take out that low. We go right to this little bit low and then rally up Judas swing, and then they dump it aggressively. They accumulate all of the interest for trailed stop losses, put people offside. Algorithms are now systematically chasing sell programs. They want to be bearish. They want to sell short. And then the market rips higher, goes back above the low. It's back above this low. So what have we done? We've climbed 2 pools of liquidity here. Now, if you look inside this area here, this SIBI becomes a inversion for Vega. You see it getting the low here, right there, rallies up, and then it goes for the buy side. Then it trades back to the inefficiency that was a fair value gap over here. And then Friday, midnight Eastern time, the point of me mentioning that was you would think that with relative equal highs here, it's likely to go up there, trade above the midnight opening price, and then go down there to Michael's target. Not when it's Friday. Not when it only has a little bit of time left. It needs to use the chaos, the rocket fuel, the volatility of session opens. Pre-market session, 7 o'clock, trades lower, and then session close at 9 o'clock. We get a little bit of a drift, and then one more time, Judas swing at 9:30, pulls the rug, elevator, careens lower, takes out all of the levels that would have any liquidity there, and more just to get folks thinking it's going to keep going lower. And then massive short covering, because I had everybody on the internet that was trading NQ focusing on this level right here. Then, only then, price works its way back to Friday's midnight Eastern time opening price, clears it here, and then goes up for another minor buy side pull. So there's that inefficiency there. Okay, to it here, consequent encroachment. Then right in here, where I was giving you the review and teaching you that 8-minute long lecture about why we don't look for these relative equal highs in between 7 o'clock and 9 o'clock. because it's going to the weekly draw. It's going to go there, even though it's so close right here. Just because it looks smooth doesn't mean it's going to go there, then down here. You got to think about how much time, because time is the most important factor. Time, you have to consider it only has Friday, because when we close at 5 o'clock Eastern time, it's it. Then you go into the weekend, and we got to wait until what happens on Sunday at 6 p.m. And nobody knows what that's going to be. I don't know that. Market then, after clears that buy side here, trades back down below Friday's midnight opening price. And then we settle in TGIF between 30 and 20% of the weekly range and close right there. Now, if you would have paid attention every single day of the week in the lectures and the things I said about price action and where it was going to go to, and then blend in what I was teaching in 8 minutes this morning in the video, it's very simple and easy to understand. Don't expect these relative equal highs to be taken before the draw on liquidity, because it's Friday. It's Friday, folks. It only has a little bit of time. And notice that the flurry of activity is at the session openings here. And as soon as it does the run to where we thought it was going to go, look at the momentum that comes into the marketplace. This right here, that's not buying pressure. It's not selling pressure evaporating. This is it printed there, and now it's going to quickly run for the liquidity here, because they don't want to present them an opportunity to pull their orders. That's why the speed at which you see it doing that, it's quickly to get up to here. And then we have a retracement. And I said, like I told you in the 8-minute long lecture this morning, I would personally be done with the week, because it's already done everything. Notice it didn't go any lower. And who cares if it goes back to the midnight opening price? Who cares? It's not going to go up there and go lower. And you hear me say that. And it didn't. It went up there and took a buy side there, and then we went right back in between the low that I told you it would be done, and this high. There you go. Big deal. It's going where I taught you that it would go. TGIF, 20 to 30% of the weekly range retracement on a Friday. Bang. Done. Handled in the books.